Welcome back, guys, to another banger video. In today's video, I'm going to discuss a pattern that has a 80% win rate. And what pattern is this? This is a flag pattern. I know a lot of people have been wondering and maybe searched the internet or looked here and there on how you would find this strategy and how it works. So I'm going to do justice to that in this exact video. So if you want to find out how, stay tuned. Let's dive in. So guys, this is how the flag pattern works. On the left hand side is a bearish structure. On the right hand side is a bullish structure. So let me explain more of the bearish structure. So the bearish structure is that, okay, before I even go in details about the bearish structure or bullish structure, the flag pattern is a continuation pattern. So for example, if you're on an uptrend, let's say the trend of the market is an uptrend, you know that if you are trading the flag pattern, you are looking for buys. You understand? It's a trend continuation pattern. It's not reversal or any other thing you want to think about. It's a trend continuation pattern. Sorry, you understand? You get my point, guys. The trend continuation pattern. So on a bearish structure, on a bearish example, you have a downtrend. But the typical situation is that you have a downtrend, and on that downtrend, you now get to a point where consolidation happens. That's what happens here. We have a bearish structure, then we now have some consolidation here, and when the consolidation happens, the highs will be breaking. For example, you can see here the highs got broken, which indicates an uptrend. It's not an uptrend. These highs are just being broken temporarily. These temporal highs are inducement. They are looking for traders to trap. Understand? They are looking for early buyers that will get into the market here, expecting that after this break of structure, the market will tap here, then move up from here, then move up. This is the plan the market makers and the institution have when trading this strategy. So since we understand the flag pattern, we can't be used as inducement. We know that it's just a trap. Because why is it a trap? The overall trend of the market is a bearish trend. And if you understand market structure very well, you know that this break of structure are just inner structures. Are just internal structures, internal structures. Understand? We are going to go on the chart and explain extensively, but I'm just giving like the raw and background overview of this strategy and how it came to play. You understand? So, and you guys should know what trading is all about. Trading is a dog-eat-dog market. When you are profitable, somebody else is losing. So the best way to approach trading is that you should be able to figure out the losers in the market, and you should be able to figure out the winners in the market. There's a saying that if you can't spot liquidity, you are the liquidity. Yes, that's just how it works. So but now we can figure out that these guys are just playing mind games here, but this is not a very demand zone that will push the market up. So we, knowing that, we wait for the market to break this low. You understand? Then we wait for the market to come back and retest. The market will come back and retest two things: one, the trend line, and the demand zone. The last demand zone that it broke, the breaker block. You understand? So it must touch the breaker block and the trend line. You can see that's how we know that yes, it's a valid trend. And the trend of the market must go in the direction of the market. Direction of which market? Direction of the higher structure, which is the bearish structure in this case. The same example I give here is almost the same thing that applies to the bullish example. You understand? But it's just opposite. So we have a bullish trend, then we have a level of consolidation. Let me tell you a secret about markets. Even though the market is on an uptrend, the market can't just be trending in one direction. It needs to consolidate a bit. And to me, that consolidation is that, you know, if you are traveling, you can't just be traveling without stopping by and filling your tank. You understand? So now that's how the market works. The market can't just be trending and be going up and going up. It needs to come back and take liquidity. What is liquidity? It needs to induce people. You need to deceive some traders and convince them that the market, for example, for example, in this market, we have an uptrend. So it needs to deceive the traders that we are on a downtrend. You get the psychology, guys? Because now if you can notice here, it just showed that we are on a downtrend. The lows were being broken here. So it shows, okay, the trend of the market is trying to change, you understand? So some people have maybe placed a sell order here and they may have got the trade, yeah. But now a whole lot of traders will want to sell here. So the people that were being stopped out here will be people that the market will use as fuel. You get my point? Those are the people the market will use as fuel to channel the market in the real direction, not the temporary direction. I hope you guys are following me. This is very simple concept. I don't like teaching people things mechanically, you understand? I like breaking it down for you to understand, because everything's about understanding. When you understand the market, you can even create strategies on your own. If you have enough understanding, you can create strategies on your own in the market. You can. So let's dive to the live chat and let's understand this much better. So you guys can see I'm on the GBP USD on the 1 hour time frame, and we can see from this trend we have a strong bearish move. We can see we have a strong bearish move, but can you notice that a flag pattern occurred here? Let me show you guys. So let me show you guys with the trend line first. You can see that we have a trend line which indicated the flag pattern. Understand? Hope you guys can see this. You can see a trend line which indicated the flag pattern. Is this not looking like a flag? That's why it's called flag pattern, because it always looks like a flag. Simple, that's just it. Nothing much, nothing less. And you can see, like I told you guys earlier, if you understand market structure, you can see that we have a temporary break here, the market broke structure, which we had a change of character here. I don't know if I should do this, but I think maybe if I do this, people can understand better. You can have a change of character here, then followed by another break of structure. So everybody assume that, oh, we are in a bullish trend. I hope you guys understanding the logic behind all these things. I love teaching the logic behind things rather than teaching the strategy only, because it doesn't make much sense. Because if you just understand the strategy only, it gets to some point where you feel you get confused. You understand? You can see if created a change of character, a break of structure. So automatically everybody assumes that, oh, the trend has changed. What will always happen? Then we have guys that will place their buy order here, expecting this demand to hold. What happened? They were taken out. You understand? They were taken out again. So this is the icing on the cake. Come and see the icing on the cake, guys. Come and see the icing on the cake. See what happened here. After breaking the structure, after change, this is a change of character again. After this, look at what the market did. Look at what the market did, guys. Just pay attention, guys. This is very interesting. The market came back again to break the structure, to create another change of character. Understand? Which indicating that we are on an uptrend, which most people will be expecting to buy the market from here or here, from this demand zones here, from here or either here. And what happened? They were taken out. Now let's come back to how the strategy works. I told you guys we are entering after we see two things. What are the two things? The trend line break and a retest on the trend line, and a retest on the last demand zone that broke that structure. So we have a retest on the trend line. The market came back to retest this trend line. I think let's draw it well like this. Yeah, because this covers everything perfectly. So we can have a retest, this retest, and this is the demand that broke that trend line. So we can see this is where we have our trade. And what do? You enter your short. So you now ask me, how should we now enter our trade? Where should be our stop loss, our take profit? So I'm going to give you a strategy that works 80% of the time. When you see a flag, and you use this TP and stop losses, you have an 80% win rate. what is the TP? Let me level. What is TP and stop loss level? Let me show you guys right now. I use, and you can use maybe a trend line or anything, an arrow, but I use an arrow. I don't know, I just like the arrow. I can use a trend line or any other thing to measure the length inside the flag. So I measure the length. I can pick it from anywhere, so I just pick it from here. So I measure that, then I will now take it to where the market retested the trend line. I'll measure it together to where the market retested the trend line. Yeah, this is what we have. Then my entry will be here, will be somewhere around here, because yeah, the last demand zone. Yeah, so this is where my entry will be, and this will be my TP. So let's look at the risk reward. So that's how I do enter my trades if I want to have a high percent win rate, because this always happens 80% of the time. Understand? And I'll show you guys the second risk entry. The second yeah, it's a bit risky though, but this has an 80% win rate. You can take it anywhere, guys. So this gives us close to 1:4, thereabouts 1:4. This is okay if you ask me, but we can still take more. So if you want more, you can measure this other length here. You measure this length from here to here. You understand? If you want a more risk entry, so this is it. So the second TP will be here, be somewhere around here, and it came. You can see it came. You can see how smooth and easy this thing is, guys. So if you went for the second TP, you've got 1:6. Easy and smooth, guys. This is how the flag pattern works. This is how everything about the flag pattern is from A to Z. So let's take another bullish example, because this is a very simple example. Let's take a bullish practical example. So guys, this is a bullish example. So we can see that we have a very, very strong uptrend. Let me even draw the trend line for us to see. We have a very, very strong uptrend. We can see how the market was very strong. But when we got here, what can we see? We can see that the market created a false change of character, a false information that the market is about to change its direction. That's what happened here. So we had a very strong bullish structure. Then we can see a change of character here, change of break of structure, downside, break of structure. So now automatically they've induced a lot of people who will have placed their buy limits here, you know, expecting the market to sell, because automatically they know that, okay, yeah, the trend is about to, the market might change this trend. Because obviously they know, okay, with the loss of momentum here, it looks like the trend won't change, you know, you understand? So these guys were the ones that were used as fuel to propel us to the promised land. So let me take this out. So let me show you the flag here. You can see here that this is the flag clearly. It's very, 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 very clear. So you guys just need to be patient. And that thing, if you want to trade this flag pattern, please and please, the minimum time frame you go below is the 1 hour. You understand? The minimum is the 1 hour. And I'm using the 1 hour. It's very, very effective. So you can use the 1 hour, 4 hours, 1 day, and 1 week. Just depend if you can wait. Understand? But I advise you guys just go for the 1 hour, because it takes a whole lot of time for even you to spot a flag pattern. But when you spot it, my brother, my sister, you spotted gold. Spotted something huge. So let's continue with our description. So here so this is the channel. You can see that this is the flag. You can see we had a strong bullish trend, then the market created the false illusion that we are in a downtrend. This is the false illusion. Induced trader to be here. We use them as foil. Understand? So what did I tell us? For us to enter a flag pattern, we need to enter on two things. What are those two things? We need to see a retest on the trend line and a retest on the last supply. So if we are entering on a bullish flag, we are entering on the supply, on the last supply that broke structure. You understand what I'm saying, guys? Or a breaker block, that broke structure. So what can we see here? We wait for the market to break the trend line. It broke it, so we are now waiting for the retest. So where's the breaker block? This is the breaker block. This is the breaker block. So this is the supply zone. This is the supply zone responsible for the break. This is the supply zone. So was all our condition met? Was all our condition met? Here's the where. You can see it broke the supply, then it came back to retest. So you could enter anywhere from here and your stop loss below that supply zone. That's all. Let the trade run. Very simple and easy, guys. Nothing more, nothing less. Understand? If you want to draw a supply zone, this is how to draw the right supply zone, because this is where it ended. Nothing more, nothing less, guys. This is just it. So you enter your long position from here. You enter your stop loss below this. Then, so you go and pick your trend line. You measure the length between the channel. Then pick that here. Then use it to tap the trend line which the market came back to retest to. So the market came back to retest it here. This is where it happened. Then that will be our TP, and our stop loss will be this. As you can see, 3.85. So this is giving us a minimum of 1:3.5. It's approximately 1:4. You understand? So guys, try it out and come and give me feedback on how you see the strategy. And if you want to see more video on this strategy or any other thing, just comment below, like, subscribe, share this video, and see you guys later.